What trade war? Markets have seemingly ignored the economic problems between the trade disagreement of the US and China, and they've pushed back up very strongly across the past fortnight. Does that mean that the rally's back on and we're going to see all-time highs renewed? Or are things about to turn around? So hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday, the 6th of May, 2025. But before I get started, you do need to be aware that whatever I say is general advice only. So we start with the trade war, and it basically caused markets a lot of consternation in early to mid-April. We saw extremely quick selling, but over the past fortnight, that's really been bought straight back up. In fact, the US S&P 500 index has had, up until Monday night, they had 9 consecutive green sessions in a row, their longest consecutive run of gains since November 2004. Really unbelievable, given that the U.S. economy contracted in the first quarter, and if they have a second contraction in the second quarter, that would be a technical recession by most measures. Now, I will caveat that by saying that the U.S. GDP numbers were probably made a little bit worse, or they looked a little bit worse than they actually were, because people brought forward a lot of imports before, to get them in before the tariffs hit. And that additional imports, basically it detracts from the GDP numbers. So it makes the numbers look a bit worse than they actually were. Looking at the consumption and things like that, the numbers weren't too bad. And also we saw US unemployment data on Friday night, and that actually didn't look too bad either. So both of those points might suggest that a recession isn't quite here yet. I will just say though, if the tariffs remain in place at the current settings, I do think the US will head to recession. I don't think we've seen the effects of these tariffs really start to weaken the economy just yet. And I think, the effects could be worse than people think. Things could get worse unless they're resolved. And I don't think the market's really priced in just how badly worse things will get. Now, obviously, if there is some sort of resolution, markets will push straight back up. I don't think we're close to a resolution though. Now, on Friday, obviously, markets jumped, before the US jobs numbers. They jumped because the Chinese said that, they're going to negotiate. But if you actually looked at what they said, it wasn't basically, we're going to come in and make a trade deal. It was much more along the lines of, if Donald Trump stops antagonizing us, maybe we'll have a discussion. And, to me, that didn't sound like they were close to a deal. It didn't sound like any terms were at all going to be discussed. It basically said, yes, we'll maybe start negotiating if he's less of a dick about it. So I don't think they're very close to starting to even discuss terms, let alone make a deal. So I do think there's a chance we see things get a bit worse before they get better. And on the flip side of that, on a more positive side of things, I think Trump is really, willing to make a deal. He's in deal mode now, and that's basically because I think the reaction to the trade war has been a lot more negative than he expected, and not just from the equity market, but from the bond market, and from financial markets that Trump really can't allow to break. And so I think he's basically been forced to make deals. I think he's begging China for a deal, and I think China really can probably. I won't say set the terms of the deal, but I think they'll come away looking like bandits if a deal is negotiated. But, we're going to have to wait and see. And like I said, I don't think a deal is close at all. For Australia, though, perhaps a bit more importantly, this week we've got bank reporting. We saw Westpac report earnings on Monday. We've got NAB tomorrow, ANZ on Thursday, and then Macquarie on Friday. And then next week we've got the CBA quarterly report. Westpac's report was not great. They fell 3% on Monday, down another 2% today, so a 5% fall following the report. And it really goes to show that, the banks probably don't justify, their share prices aren't justified by their current earnings. Now, our market has basically rebounded to where it was before the tariff-related selling, but we haven't gone back to our all-time high. Now, the all-time high, we came off that after the last round of bank reporting. So this week really might sort of be a bit of a decider for the Australian market as to whether we can justify these high prices. The banks are as expensive as they've ever been, yet their earnings haven't grown for 3 years. Westpac's report was a reminder of that, and like I said, they've fallen 5%. If ANZ and NAB also remind us that these bank share prices are unjustifiable, I think it's going to be hard for the Australian market to go much further from here. And that's, irrespective of what happens overseas. So like I said, NAB tomorrow, ANZ on Thursday, Macquarie on Friday, and then CBA next week. And perhaps the most important one, even though it's not going to be a half year or a full year report, will be the CBA report next week. CBA is the most expensive bank on earth, and unless they really have a fantastic quarterly update next week, it's hard to see too much further upside for them or for the banking space in general. But on a bit more of a positive note for Australia, we are almost certain to see an RBA rate cut this month when they meet on the 19th and then announce the potential rate cut on the 20th. It's basically booked as a shoo-in from all major market watchers. That's despite the Australian inflation coming in a little bit stronger than expected last week. Overall, I think people are happy to just assume that the trend is lower for Australian inflation, and that if anything, the trade war between the US and China might actually drag down Australian inflation further. And that's basically because cheaper goods that might have been shipped to the US could be dumped here and basically force local prices a bit lower. Following the expected May rate cut, most people are expecting another 4, maybe even another 5 rate cuts from the RBA this year. And that's basically because they're also expecting our economy to be fairly subdued, perhaps even a bit weaker, and also expecting that the inflation's going to continue to trend lower, and all indications are that inflation will trend lower. In fact, we've seen oil prices fall quite strongly, and then they had another leg lower over the weekend after OPEC announced they were going to increase oil production. So overall, the signs are that inflation's becoming contained or controlled. That the government and that the RBA have won the battle against inflation and cost of living, and that basically we're going to be rewarded with rate cuts. And even though the economy is probably not going to be too strong. So I'd say that's a bit of a positive for the Australian market. Could act as a bit of a carrot dangling in front of the market. And, even with the trade war going on and the bank's share prices possibly a bit weaker after the reporting and dividends, maybe other parts of the market might fare a little bit better. So let's have a quick look at the charts for this week, guys. And this is the US S&P 500. We can see they had the 9 consecutive gains over the past fortnight, and then they stalled a little bit in Monday night's session. They're a little bit in no man's land here. I was taking the view that we're going to come back up towards 57.75, 5800, and that would basically be in line with their peak at the end of March. If they did reach that level, the market doesn't look quite as bearish. They've had a couple of inline peaks basically, and the hallmarks of a downtrend are lower peaks. If they fall off before reaching that peak, though, it will be a lower peak than the March peak, and that would be quite a bearish sign. So we're just basically watching to see what they do this week. If they basically break back below 5,500 before reaching 5,800, that would be quite a bearish sign. And to me, then we're starting to look back at the lows or some of the levels in April. So at the moment, though, for the US market, they're really in no man's land, and they're really waiting to see which way the wind blows. So like I said, the key levels to watch: to the downside, probably 5,500, and to the upside, 5,800. Even if they don't break 5,800, if they can even get back there, I'd take that as a bit of a positive sign. But like I said, a break below 5,500, that's a very negative sign from here. So let's have a quick look at the Australian market this week. And our market actually looks quite a lot stronger. We've come back up to, almost up to 82.50. And that was the level, or we were trading at these levels before the trade war was announced. We actually fell off to these levels based on the bank reporting from February. So we're actually, we've pretty much disregarded the trade war. It hasn't affected our market. We've regained all the trade war related selling that our market has seen. We're back at the 200-day moving average. We're back at the 100-day moving average, and we're back at the key 81.50 level. We're probably going to wait to see which way the US goes from here to decide on our own move. Although if the bank reporting is particularly weak, we might break in advance of that. If we break back below 81.50, that means we're probably going to go back towards 8,000, maybe even below if the US market sees selling. If we hold 81.50 to the upside, it's hard to see our market going above 82.50 unless the bank reporting looks good and or we see some strength in the US markets. But for our own market, we're at a really key level. We're waiting to see which way the US markets go. We're waiting to see the strength of those bank reports. I have a suspicion that we will break one way or another by this time next week. So make sure you tune in to next week's session and we'll see which way things have gone. So we'll wrap it up there. Hopefully you guys enjoyed. If you did, click like, click subscribe, and we'll see you guys next time.